Okay, let's unpack this. You've handed us a real snapshot of the world as it stood on, what, May 8th, 2025.
That's right. A pretty busy day, globally speaking.
Yeah, looks like it. We're looking at a pretty dense stack here. News reports covering, well, everything from escalating military tensions to significant economic shifts and some pretty big business deals.
It's a lot to process, definitely.
So let's dive straight in. Your mission, should you choose to accept it, and you have,
I have.
is to make sense of this. Without getting, lost in the weeds,
No.
we're going to highlight the most critical developments, maybe find those surprising connections that often hide beneath the surface,
Mm-hmm.
and ultimately answer the big question. So what does this all actually mean for you, the informed and curious listener, trying to navigate this complex world?
Indeed. And this collection of reports, it really paints a picture of a global landscape grappling with multiple interconnected challenges. Let's maybe start with what seems to be dominating headlines, the escalating situation between India and Pakistan.
Absolutely. Operation Sindoor, right? India's missile strikes, Pakistan's very strong condemnation. It sounds like a serious escalation.
It certainly does, citing retaliation for that April attack in Pahalgam.
Right, and the markets have definitely reacted. Pakistan's KSE 100 index took a significant hit.
A big hit, yeah, down over 3% by the close, I think, after plunging even more intraday.
Okay, while India's Sensex,
Hmm?
it actually saw a slight increase, just 0.13%.
Yeah, exactly, a slight uptick. Plus, you've got currency movements, gold spiking.
So what's driving this divergence in how the markets reacted? It seems counterintuitive almost.
Well, the fact that India's Sensex saw that small increase, despite the military action, it suggests maybe a market perception of limited escalation risk, or perhaps confidence in the government's handling and the economy's underlying strength. We've seen reports of positive domestic policy shifts there recently.
Okay.
Pakistan, on the other hand, its greater reliance on external aid, particularly the IMF, that makes it more vulnerable to this kind of geopolitical shock. When geopolitical risk goes up, investors often get less willing to hold that nation's debt. So you see selling pressure, bond prices drop, yields go up because investors demand more return for the higher risk. The stock market plunge and the dip in their dollar bonds really reflect that heightened risk perception.
And gold. As we often see in times of uncertainty, it jumped, both in India crossing that big Euro 1,000 mark, and internationally, too.
Yes, hitting a 2-week high near $3,400 before settling back a bit. Classic safe haven behavior.
So beyond these immediate market jitters, what's the broader significance of this escalation, thinking bigger picture?
Yeah, connecting this to the bigger picture, this flare-up in South Asia, it increases the overall geopolitical risk premium in the region.
That geopolitical risk premium, explain that a bit more.
Sure. It just means investors demand a higher return on their investments in regions facing instability. It's compensation for the increased uncertainty, the potential for negative economic fallout.
Got it.
And this can have a chilling effect on investment, on trade, not just between India and Pakistan, but potentially for other emerging markets too. And you mentioned Moody's. They're warning about the negative impact on Pakistan's growth and financing. That likely factors in Pakistan's high debt, the potential difficulty in getting more international loans or investment when things are this tense. It can create a sort of feedback loop of economic pressure.
A feedback loop.
Yeah.
Okay. Shifting focus now. Another region experiencing, well, significant turbulence, the Middle East. The situation there seems, I don't know, different. A different set of challenges.
Definitely complex in its own way.
We have this verbal understanding ceasefire,
Yeah.
right, between the U.S. and the Houthis.
Mhm.
But then the Houthis say it doesn't apply to Israel. They're still launching drones.
On May 7th, report said.
And there's a reported Israeli airstrike in Yemen, hitting Sana'a airport, plus Israel's plans for indefinite occupation of Gaza approved around May 5th. It feels incredibly fragile.
Very fragile. The U.S. halted its airstrikes after May 5th, but as you said, the Houthi actions continue against Israel. And that reported strike on Sana'a adds another layer of complexity.
We saw those really sharp market reactions in South Asia. Are there similar, maybe less dramatic economic ripples happening in the Middle East from this continued instability and, Israel's long-term plans for Gaza?
Well, maybe less sharp day-to-day fluctuations compared to the Pakistan market drop, but the economic implications are definitely significant. That U.S. Houthi truce, while, maybe a positive step, doesn't really negate the ongoing risks to Red Sea shipping.
Right. The costs there are still high.
Exactly. Those sustained high shipping costs, the war risk insurance premium staying up around, what, 0.75% to 1% of the ship's value? If global demand recovers, that could certainly feed into inflationary pressures globally. It could impact the cost of goods for you, for everyone.
Uh,
And Israel's stated intention to occupy Gaza indefinitely. That signals a potentially very prolonged conflict, which will, undoubtedly, continue to impact regional stability and, by extension, energy markets.
so oil prices, they've been fluctuating, but supported by U.S.-China trade talk hopes recently.
Yeah, WTI around $58, Brent around $61 as of the 8th. But any real escalation in the Middle East could easily trigger price spikes. That risk hasn't gone away. We did see defense stocks like Lockheed Martin rise earlier in the week on these broader tensions.
It feels like so many different things are happening all at once. We also got a quick look at other geopolitical stuff. Ukraine, the drone attacks, the new chancellor in Germany.
Friedrich Merz, yeah, elected May 6th.
But a weak first-round vote, raising some concerns there.
Concerns about coalition stability, his ability to push reforms. The DAX initially reacted negatively, though it did stabilize.
Okay, and then Iran's energy issues, domestic discontent, and the U.S.-Canada meeting. Trump rejecting Carney's proposal.
Yeah, the 51st state idea got shot down, and Trump apparently didn't commit to lifting tariffs.
Do any of these smaller items, I mean smaller, relatively speaking, do they stand out as particularly relevant right now?
They all contribute, I think, to this overall sense of global uncertainty that we're seeing reflected everywhere else. The Ukraine war keeps pressure on supply chains, energy, food, Black Sea shipping insurance. The German political wobbles, even if temporary, show how uncertainty in big economies creates ripples. Iran's domestic situation, another potential instability point in a key energy region. And the U.S.-Canada friction just highlights the ongoing drag of U.S. trade policy on its neighbors. It all adds up.
Which leads us nicely, I suppose, to those economic headwinds. The Federal Reserve, they decided to keep interest rates steady, 4.25 to 4.50%.
Correct. FOMC decision on May 7th.
And Chairman Powell sounded pretty cautious. Mentioned the economy was robust, but risks are increasing inflation and rising unemployment, and specifically called out U.S. tariff policy as complicating things.
Yeah. No rush to cut rates was the message. The Fed is certainly in a tricky spot. They're navigating these dual risks, inflation potentially juiced by tariffs and a possible economic slowdown on the other side.
So they're just waiting.
Pretty much. Their data-dependent approach really just means wait and see. It reflects the uncertainty. What's fascinating, though, is the market's reaction.
How so?
Well, U.S. stocks saw modest gains, Treasury yields were mixed, the dollar strengthened, but the market seems to still be anticipating rate cuts by the end of 2025, even if near-term expectations cooled off after Powell spoke.
So the market's kind of hoping for a different outcome than what the Fed is signaling right now.
Well, you could say that there's a disconnect, or at least a difference in outlook, that sets up potential for volatility down the road, depending on how the economic data actually comes in. The focus, for now, seems to have shifted back to the U.S.-China trade talks and corporate earnings.
Right. And speaking of trade, those U.S. policies, the aggressive tariffs, like 145% on China, still troubling markets.
Yeah.
And now this big reversal on the AI chip export restrictions.
Yeah, the Biden-era AI diffusion rule. The Trump administration announced plans May 7th or 8th to revoke it, said it was too complex.
Too complex. It was initially framed as a national security thing, wasn't it? Why the U-turn?
Well, too complex is the official line, but it's highly likely they're also weighing the competitiveness of U.S. tech companies. NVIDIA, AMD, those guys saw their stocks jump on the news.
Okay.
Easing these restrictions might be aimed at letting U.S. firms compete more effectively globally. Maybe they'll try to manage sensitive tech flows through more targeted bilateral deals instead of broad, complex rules.
So it's policy whiplash, as you put it earlier.
Exactly. And that constant shifting itself harms the economy, right? It deters business investment when the rules keep changing. But this move on chips, it also underscores how the trade conflict is speeding up the restructuring of global value chains. Companies have to adapt.
Okay, so a lot happening on the macro level. Let's zoom in on some specific company and industry news. Tech, as you just mentioned, seems particularly active. Chip policy shift and that big DoorDash Deliveroo merger.
Yeah, DoorDash confirming the Deliveroo acquisition for about $3.9 billion and buying 7 rooms for $1.2 billion.
Wow, big moves. Expanding internationally, adding local commerce services.
It definitely reflects ongoing consolidation in that whole food delivery space. Companies are trying to build scale and offer more. Interestingly, though, DoorDash stock actually fell despite the deals and reporting pretty strong earnings otherwise.
Why's that? Worries about the price tags. Integration.
Could be a mix of things. Investor concern about the cost, maybe the complexity of integrating these businesses, or just the long-term impact on profitability in a tough market.
And then there's the defense sector.
Uh-huh.
Perhaps unsurprisingly, given everything we've discussed, seems to be doing well.
Unsurprisingly, yes. The ongoing geopolitical tensions, the rise in global defense spending, it's providing a significant tailwind for companies like Lockheed Martin, Northrop Grumman. BAE Systems maintained its outlook.
So global instability is kind of a structural positive for that industry.
It's perhaps an uncomfortable reality, but yes, periods of heightened global instability often translate into growth opportunities for the defense sector.
Okay. We also saw Disney reporting strong theme park and streaming numbers, and the U.S. sanctioning a militia in Myanmar over scams.
The Karen National Army, yeah. Alleged involvement in online scams, human trafficking.
Right. And finally, a couple of other non-financial items caught my eye. The papal conclave underway in Rome.
Began May 7th. First vote inconclusive. Black smoke. Continuing on the 8th.
Minimal market impact, as you noted. And also the 80th anniversary of VE Day, victory in Europe.
Yes, commemorations happening on May 8th. A moment of historical reflection amidst all the current turmoil. It serves as a reminder, doesn't it? The long arc of history, how echoes of past conflicts and resolutions still shape today's world.
Absolutely. So wrapping this up, what does it all mean? We've seen how, well, everything seems connected. A military strike in South Asia sends ripples through financial markets, while a U.S. tech policy shift boosts chip makers thousands of miles away. The uncertainty in trade, this delicate dance of global powers, it creates a really complex environment that just demands constant attention.
That interconnectedness is absolutely the crucial takeaway. Geopolitical instability, trade policies, central bank actions, they don't happen in isolation. They're constantly influencing and reacting to each other. It creates this dynamic, often unpredictable landscape.
And here's where it gets, I think, really interesting. You can't help but notice how many of these seemingly separate events, India-Pakistan, the Red Sea risks, even the U.S.-China trade stuff, they all feed into this underlying feeling of global instability.
Yeah, a persistent sense of unease almost.
Right. And in that environment, certain sectors like defense, as we saw, tend to do well.
Yeah.
It really makes you think about the fundamental forces shaping our world right now, where the potential vulnerabilities and maybe opportunities might lie.
That's a key observation. Periods of heightened geopolitical risk, economic uncertainty, they often lead to shifts. Shifts in investment flows, sector performance, as everyone tries to navigate these turbulent waters.
This snapshot from May 8th, 2025, it certainly gives you a lot to chew on. A world grappling with conflict, economic shifts, political transitions. What stands out most to you from all this? And what big questions do you think this raises, about what might be coming next for the listener trying to make sense of it all?
What stands out most, I think, is the persistent and really multifaceted uncertainty across geopolitics, the economy, policy. It's everywhere. And this raises really important questions about resilience. How resilient is the global economy to these compounding pressures? What's the potential for more unforeseen disruptions? It just underscores how important it is for everyone, to stay informed and critically evaluate the information coming at us.